Can you build a full-featured strategy using AI? The simple answer is probably, but you can see that you can get some pretty interesting statistics. This is the excerpt right from the ChatGPT, but how did it go? How did it actually go? So let me show you how it actually went. So my actual journey with AI started with some prompts that I gave, and I proceeded there. So in the next 15 to 20 minutes, let me show you exactly what happened. So here's an idea. The idea that I have is, can I build a systematically traded strategy using ChatGPT? In this case, I literally prompted ChatGPT, and it already knows me. I can refer to it or him. It already knows me, and it knows that I use systematic trading, so it knows that I'm all for the rules. So I'm not some off the street complete novice. I do know systematic trading. Okay, so I said, can I build a decent strategy using AI? And if yes, then what can I do with it? So here's my simple concept that I went with. I'll ask it to build an AI, the strategy using this SPY. So it's simple, right? If I try to ask it a basket, it will probably go crazy. So instead of doing that, I just want to see, at least on a simple example, what will happen. I'll leave it to AI's discretion to come up with what kind of rules it has. So I'm not going to guide it yet. Then, once it comes up with some kind of rules, I'll guide it. So let me show you exactly what happened and how it did it. I have a whole prompt. I will just scroll through the prompt that I was asking, so the questions that I was asking, and the things that it was responding back. So let me show you. So here's the fun part. Okay, so this is what I asked. Could you build me a trading strategy on SPY with entry and exit rules, stop loss and profit targets, include a backtested summary? Okay, it gave it quite some thought, as you can see. Thought. So what I was thinking of is like, considering how to gather historical information. Couldn't gather it. Was planning to do the trend following strategy. For some reason it didn't do that one. But then it instead of trend following, it came up with it looks like it's a simple, see it says 5-day simple moving average and time limit. That's basically a mean reversion system. Okay, so it came up with that one. Then it was thinking a bit more, exploring alternative data sources. As you can see, there's a lot of things that it was exploring, like going against all kinds of ways to get the data, which is okay with me. Then it was thinking more, considering external sources. Basically, it couldn't find the data source to use for SPY. Okay, it's fine. Then, hey, here's the clean SPY long only swing strategy. Okay, so it's a swing strategy that is simple enough to execute and robust enough to be worth testing. Okay, now it's the SPY pullback in uptrend. Okay, so it's basically mean reversion strategy, even though it over there claimed before, as I said, long-term term following. And it says, okay, here are the indicators: 200-day moving average, 5-day moving average, RSI 2, ATR 14 days. Not a big deal. Very common, by the way. Very, very common. Now, here's where the rules are. SPY has to be above 200-day, which signifies that it has to be an uptrend. The RSI is below 5, which means it's a severe oversold condition. And then the closing price is below 5-day moving average as well. So this way, it explains it. It has the exit rules with the profit target, stop loss, mean reversion exit, where it reverts back to basically to the 5-day moving average, and then at 7 days trading stop, meaning that if within the 7 days nothing happened, we just exit. Okay, very simple system, logical too, by the way. It's very logical, very sounding like as if it's a real system. It is a real system, but just so you understand, it's not as good as it seems. So stay tuned a little bit, and I will show you a little bit more what's going to happen next. Okay, so it gives me the risk model. Okay, it sounds very, again, logical for this type of account. If you risk this much, then your stop distance is blah, blah, blah. That's how much shares to buy. Again, all legitimate, by the way. It's all legitimate case. Backtested summary. It's a 73% win rate with this much gain, with this much in the market, this much 23% maximum drawdown, closely related SPY pullback strategies, blah, 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 and says basically something which is closely related to this, and the CAGR is 7%. Okay, keep in mind this is what it says, and 14% maximum drawdown. Versus buy and hold, so it's slightly worse than buy and hold, but obviously buy and hold has 56% drawdown. This one has 7%, the 14% drawdown. So far so good. Okay. Plain English. Okay, I don't go to read the whole thing because then what I said. What if I use the previous day closing price for stop loss and profit target? The reason why I do that, because I have a software, Quantum X, that I've developed, which I can use to backtest things. And I use the previous day close because it's using the end of day data, so I don't have the ability to see what's intraday happening, but I have ability to see what was happening from the previous day close. It's oh, great question. Of course it is a great question. And the meaningful modifications. Okay, meaningful modifications. And then it says that yes, there is a way to interpret it. Interpretation of A, most logical, most B. This is what I'm aiming for. There are some modifications. Tries to compare things around. Again, sounds very logical. This one is very bad. This one is good ratio. Blah 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 blah. Key structure, big weaknesses, and then expected behavior. And this is what the expected behavior took for this test. Okay. And so the win rate is 75 to 85%. In smart implementation, we're going to use this. Again, some kind of a profit target calculation. What's better? Pro weaknesses, blah, blah, blah. And everything is good. Like bottom line, use this part of the thing. Okay. And it offered me to write the Python code, the TradingView code, which I don't need to because it's not going to be exactly what the real backtesting is, just so you know. So stay tuned again. I will show you what it means. Now, I said, no, that's not what I asked. I said, could you use previous day close price to calculate stop loss and profit target? What I meant is to use the closing price instead of the entry price. It's still the same rules for ATR, just different price calculations. Ah, got it. Okay, so you need to be really specific with AI. If you ask some basically dumb questions, you're going to get dumb answers. Okay, so it says, oh, okay, updated rules. It's not as bad as I thought it would be. So it gives me more and more information, what kind of thing to do, what must be fixed, strategy, what improves, better R&R, basically risk to reward ratio, what gets worse, expected behavior, something is getting up, something is getting down, or more volatile, and basically the things that I asked, I said it's actually not that bad in reality, just to summarize it, but it better even summary, the reward summary, but it's still not as good as you think it should be, or it thinks that it should be, and offers me obviously to create the Python code again. So I said, what if I can provide you a SPY data? Like this is exactly my prompt right here. What if I can provide you my exact SPY data? Because I do have the data from a data provider. I use Norgate as a data provider. It provides me open date, open, high, low, close, in volume, and actually unadjusted close as well. And this way, because remember, it was thinking it couldn't find how to actually backtest the things. So I said, okay, I'll help you basically. What if I did give you data? Can you backtest it? 100% yes. Okay, so confident. Let me see this confidence. What it can backtest, blah, 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 what it can do, it can visual place. I said, okay, what I need, and I gave it basically I uploaded the file right here. Here's the CSV file, which is the comma delimited file with the data. See, it has the date, open, high, low, close, volume, and unadjusted close. Well, in this case, unadjusted close doesn't make much sense, but because SPY they don't really split the SPY. But anyway, so I have the unadjusted close of it as well. And from 1993 till now, basically. So it's a much longer period, okay? And it thought for almost 2 minutes, as you can see. There was a lot of thinking going on. And then the reason is because it was writing the Python code, as you can see on the right. It was Python code. It was trying to execute it, locating the files, putting it somewhere in its own guts, doing all kinds of stuff over there with it. And there was a lot of thinking going on basically behind the scene. And then it says, okay, I ran it to your CSV file. I used a strategy. The strategy that we talked about, okay, and the assumption that I used, you see SPY appears to have no header, okay, yes, but I explained what columns are, so it used an adjusted close, which is, again, same thing that we need, and I assumed that the main columns are adjusted series, and those are for the test, okay. Both stop and targets were touched in the same day bar. I used the conservative assumption that the stop gets hit first. Oh yeah, simple assumption, Not that what I'm using again, by the way, in the real life trading, because you would need to have intraday data to test that way. But here are the results, okay? From 1993 till now, as you can see it right here, it says, okay, so many trades, 144 trades, 60, almost 8% win rate. Remember, originally it was 85%. Now it's all of a sudden back to 68%. Average trade, median trade, average win, average loss, profit factor, SOGAR, and then we'll look at this number. Remember how originally it was saying it was 7, almost 8% CAGR? The annualized return, basically. Now it says, hey, it's a less than 2%, 1.91% compounded annual growth rate. And maximum drawdown is 10.26%. Interesting, right? So originally, it was already giving me 8% and 14% drawdown. Remember those numbers, okay? 8% and 14% drawdown. Now all of a sudden it says, hey, it's 2% almost. So 4 times less using the real data versus some imaginary data. And then 10% drawdown. Versus the buy and hold is, hey, it's 8% and 56% drawdown. I mean, I know those numbers. So it's not as good as it thinks it should have been, right? Also leads you to believe that, oh, well, why would I even have that kind of strategy if it's just buying and holding will outperform it 4 times, right? Why would I even go for this whole trouble creating all this strategy? Even though it still encourages you with the interpretation that it's fairly controlled drawdown, everything is good. Here's the differences between the entry price anchored versus previous closing price anchored differences. So it's slightly better for the entry price anchored, even though maximum drawdown is slightly more. But this is like a negligible, to be honest. I mean, this difference between this compounded annual growth rates, okay? And bottom line, it's stable, low frequency, most driven, blah, 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 and everything is good. Except it's not good, okay? Because why would I trade it live? Is for all the trouble, I will underperform the market by a lot. Okay, so okay, can you generate me the curve? And I supplied the curve from my software of that strategy. So can you generate the curve in this case? So I can kind of compare it side by side. It says, hey, here we go, and gives me some random curve. It's like, okay, this is, I mean, it says this is the type of a curve that it will be generated. And it gives the more steps. Okay, use the strategy we tested and plotted. So it plotted this, but the dates, if you look closely, it's very hard to see. But the dates is like complete bogus dates. It's very hard to see. I mean, let me show you quickly if I can pull it in. And let me actually do it like this. Okay, give it a second. And to resize things so it fits in into the window. I hope you see it. Okay, so this is what it plotted. Well, the dates are not even dates. I mean, I didn't know what the hell that is. Okay, something over there on the bottom. So okay, that's great. That's not really readable. But it gives me some more explanation. So great, and so hey, it's very unclear at the bottom years. So give me more. It gave me this instead. Just to give you an idea, it gave me that thingy. It's like, what the hell is this? 1968, 1973, like some bogus data. So I complained about that part and said, hey, the years and scale don't make sense. So give me more. So it gave me this now, right? Okay, give me this information. And this information, look, it gave me that chart. And in essence, it says, hey, from 100 over here, it went all the way to 2000 something over here, whatever that scale is, the dollars, I guess. And this is the drawdown chart, means that it went down 25%. But remember, originally it was saying 10.26% drawdown. So I said, hey, here's the question for you. In a table of stats of the system, you said maximum drawdown was minus 10.26, but the chart you're showing is more than 25%. Why? Where's the disconnect? Oh, it's a great question. Of course, it's a great question. The real disconnect, here's why. The stats in the chart are not using the exact same equity calculation logic. Why would it be doing this? So it's give me some plausibly sounding explanation, but in reality, I don't think it's actually belief, it's actually a real true information, okay? So it gives me some explanation, blah, 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 compute it, trades return correct, this is stable, this is not stable, whatever the hell that is, right? It gives me that, oh, it's still maximum drawdown is only 10%, not 25. Why this matters? Okay. Now, here's where I went a little bit more strict at it and said, hey, here's another important distinction I need to understand. You just mentioned that the stats are 10.06 for calculated on trades, but in reality, when the position is holding, the value of it changes with the bar. So the real maximum drawdown can be deeper. How can you arrive at 10.06 maximum drawdowns? How did you arrive? Are you using closed equity or and from closed trades, or are you using the equity, actual equity from anything in between? Basically, it means open equity. Okay. So, oh, it's exactly the right question. What this actually was, it's the closed equity, which means that when you have a trade, whatever happens in between until you close the trade, it doesn't count it, right? It's not even considering that as a drawdown. So because of this, it gives me more and more explanation and says, yes, in essence, realistic is basically open equity will be more realistic, and what to expect, this is what to expect. Expect between 20 and 30% drawdown, real drawdown, even though it cannot even do that, by the way, because the Python code that it wrote, it just can't be doing this kind of a thing that easily. I guess it just needs to have more complication, and it just can't do it. And what professionals do, they use the open equity, blah, blah, blah. But just to give you an idea, and this is where I stopped for a second, okay? Now, but I wanted to show you, though, is something else. What I wanted to show you, give me a second. Here's the software that I used, QuantumX. I ran that same strategy, almost the same. Instead of, because I don't have the profit target as the SMA currently, I have Dungeon channel. So I said, okay, let me modify this strategy just slightly to be Dungeon channel driven. So I said Dungeon channel to get in, Dungeon channel to get out as well. Same RSI, same 200-day moving average as before, and it gives me that the CAGR is 1.64%. Maximum drawdown is 14%, so it's slightly better than what it was giving me. But if I plot the buy and hold, this is the buy and hold, okay? You can see that using the S&P 500, yes, it has deeper drawdowns, right? If I turn on the drawdowns in here, you will see it's much crazier, overpowering everything. Like the drawdowns are crazy for the buy and hold strategy. But besides the overpowering portion of the buy and hold strategy, you can see that this strategy by itself is so tiny that most likely you will probably say that why would I even run that strategy? Okay, so that's the one of these things that I wanted to know. And give me a second. So in conclusion, that was my original simple concept. Okay, I asked to use the SPY. I'll use the AI discretion to create a good system, and I'll guide it to when there's something not right. As you saw, there was quite a few things not right. So now, can I generate a trading strategy using AI? Oh yes, absolutely I can. As you can see, it is quite helpful, quite usable. It can give you lots of ideas, which is the last bullet point too. But is it really good? I would not rely on what it gives me right now. As you can see, what it does, it generates it based on the general knowledge which is available in the cloud, in the internet. All the published articles, all whatever the people were said before, posted videos, doing all kinds of stuff basically out there. And it's a combination of everything. So AI is very good at combining everything together and looking for patterns, but it doesn't mean that it can actually create right now a completely creatively new thing. Okay, so keep that in mind. So that is why whatever it gives you, take it with a grain of salt. It's not going to be that easy to just take it and use it. Okay, and without true backtesting, will the numbers be accurate? No, it won't be. I even asked Claude the same thing, and Claude was more honest than ChatGPT, by the way. It gave me the exact thing and says, well, you know what? Yes, because it knows my background as well. So I'm using heavily ChatGPT and Claude together. as independent tracks, and Claude is much more kind of a nicer version versus ChatGPT compared to the speaking. Maybe I will do a separate video on that part, but it was more honest and said, "Oh yeah, those numbers are just made up numbers. I'm just using it as a kind of a placeholder." But to somebody who is novice and somebody who doesn't know yet, it will sound very truthful and legitimate and authoritative. And because of this, you may be fooled to think that, oh yes, this is the way to do it. Okay, so beware that the numbers are always some kind of a bogus numbers. Even the backtesting that it does with a lot of assumptions, and a lot of assumptions are not as good as you think they are. That's why it took me 6 years to have the Quantum X where it is right now. My original version and what it is right now, I originally developed it back in 2020, literally in the midst of COVID, and right now it is a day and night things, because I had to go through a lot of iterations to include all kinds of logic, edge conditions, which correlates to the live trading. So if you have more questions, don't hesitate to write to our email, info@tradingsystem.com, and check out our website and sign up for the free course. There's no obligation to buy anything. Just go in there, sign up. And meanwhile, if you are looking for more ways to learn to do the systematic trading, I can show you a lot of ways, but always there are 4 books that we have on Amazon right now, and we're selling. So you can. We're not making money off of that. We're just trying to teach people how to do the systematic trading, by the way. So you can choose any of these 4 books, 3 of Lawrence's, 1 of mine, and learn more. Otherwise, I'll keep you posted of more investigations with AI. See you.